Ja. Toe sit my kip en is 'n skip. It's cold. Right. Sound is good. Let me know if the sound is good. Just sound testing, sound checking. Checking. Testing 1, 2. Okay. Can you hear me? Yes, I can. Okay, so I would like to play can you see the screen also? But I just stopped it now. Kyk, daar gaan nou iets kom. Okay, so what does it say? Okay, now I'm gonna play it.
Quietly ruins more traders than bad strategies, bad entries, or bad market conditions.
Can you hear?
And this is an idea that really crystallized for me after studying the work of Mark Douglas and then living through it myself in real trading. Because for a long time, I believed the same myth that most traders believe, that if I
And
wanted to
then, wait,
make
baby,
more
don't-
money, I needed to trade big.
Can you hear me talk as well? Talking about the video. Yes. Okay. So basically, what this guy is talking about trading smaller, how trading smaller made him more consistent. So, okay, just wanted to bring that up. Yeah. Now I'm just gonna look at the charts quick. Okay. Okay. Three payments. Talking. All right. Okay, there's no one yet in the live webinar, and yeah, tonight I have set something planned so nicely. 20th. Wednesday. So funny. Mm. 20th, the selling buy from 4465. What time was that? Morning. Morning. So, it's not going anywhere. Yeah. And off and on. And then it's 4535, 4534. All right, so we are live. Good evening to everyone. Good evening for those who are tuned in at this stage, even to those who are going to watch the live at a later stage. Welcome. Hope you're all doing well. Hope you are all warm, keeping like it's nice and cold winter's evening. Why is this thing so cute? All right. Good evening. Good evening. All right. I'm gonna give it like 2 more minutes as people are hopping on. Good evening, Peter. Okay. Good evening. Good evening. Thank you for liking the broadcast. All right. We are live. We are live. We are live. We are live. Welcome, everyone. Nice to have you all here. Okay, I'm just giving 1 more minute for people to hop on. We have a lot to unpack tonight. We have, as you saw I send in the group, in the trading group, I send the poster that said, topic tonight is about trade small or go broke. Now, that is like so counterintuitive to why we are in trading, right? Most of us wants to make it big. We have high goals, we've big targets to reach, we have financial goals that we would like to reach. We want to change our lives, our families' lives. But tonight you're going to, I hope, not I hope, it is going to be. After tonight, we will have a different mindset, not just about making profits, but making consistent profits and how you can get to that stage. Now, we're going to discuss why size matter. What I mean by that is your lot size. Um, can you hear me? Okay, yeah. If you have any issues, maybe just pop me a WhatsApp or on this. If you can't hear me or you can't see me, please let me know. Why is my message tonight like this? So let me know. Let me know. Peter saying he's got. I'm not sure if it his signal problem or is it my signal problem. So let me know. All right. So what? So I was still on the topics for tonight. So we're going to talk about don't chase home runs, building a strategy, a risk management strategy, because we are in the business to make money, but we need to manage our risk properly, right? Your picture is freezing. I'm just gonna check. Can't be, man. Did you click on the right? Click on the right link. Okay, it's Peter says that I'm freezing. Okay, let me just email you for Karen. Let's email you the link. I forgot to email her the link. It shouldn't. It's fine. It's only Peter. I think Peter, it's on your side that you have issues. Because the other members can see me. They can hear me. Karen. Okay. Log out and in again. Okay, let me now know if it's working, right? Let me know if it's working now. All clear my side. Okay, thank you, Monique. Right. So the first half, I'm definitely going to delve, right? I don't want people to miss out, but fortunately, this link will be available. You can watch it afterwards again. So we're going to talk about how to trade with a professional mindset. The half of this webinar is going to be focused on mindset and then how to manage our risk like pros. Now, I'm going to talk about small account risk, how to manage your risk on small accounts, and also intermediate, like not big accounts, but intermediate accounts, and then bigger accounts, how to manage the risk on that, and also how to avoid costly mistakes and to build consistency and confidence over a long period of time. And also, well, this webinar will help you to create long-term trading success. Because my aim with this is just not just that you make one big amount of money and then you are out of the market, you don't even come back, you are not even, you just make once off a bunch of money and then you lose again and then you don't make money ever again. Now we are in the business of getting you ready for you to make long term consistently so that trading can become an income for you, not just a like following signals, but that it becomes a like a solid income. So let's, I would really like, I would have loved that Peter is sorted. Let me know if you are sorted. Okay, so I'm going to play a video quickly. I want you to just watch this video. It's just 10 minutes. It's a 10-minute video. And then I'm going to stop it in between and then discuss. Um, then we're going to talk about what he is saying in this video, right? So if there's any issues, please let me know in the WhatsApp group or on here in the chat. If you can't hear him, maybe, or you can't hear me, because I will be speaking as well.
Quietly ruins more traders than I want to talk about something that quietly ruins more traders than bad strategies, bad entries, or bad market conditions. And this is an idea that really crystallized for me after studying the work of Mark Douglas and then living through it myself in real trading. Because for a long time, I believed the same myth that most traders believe, that if I wanted to make more money, I needed to trade bigger, bigger size, bigger risk, bigger confidence, bigger wins.
So, Mark Douglas, I have the book actually, Trading in the Zone. He's the writer, the author of Trading in the Zone, is one of the best trading books on trading psychology out there. I've read it. It is definitely a life changer when it comes to how to think like a professional trader. So he mentioned Mark Douglas.
Small trades felt pointless. They felt like I was wasting my time. I thought if I truly believed in my strategy, I should be pressing it harder. And that belief nearly ended my trading career before I even realized what the real problem was. So here's the truth that most traders don't want to hear. Position size doesn't just control how much you make or lose, it controls your psychology.
Very important point there. He said position size, meaning lot size. It controls your psychology. And I want you to listen carefully to what he is saying when it comes to your risk, your lot size single trade that you take. It controls your psychology because it can either make you to be in a place of over leveraging. Just listen to what he is saying. You notice how he mentioned that then when you are trading, what I need to make money. When you are trading what I I need to win every single time you come to the market with desperation, you are now not trading your system, you're not trading the plan, you're not focused on your structure, the market, the ups and the downs that for a move to play out, there needs to be phases, there needs to be pullbacks, there needs to be, you need to stop loss, you need to put you now not focus on that, you're now focusing more on your money. Okay, I'm gonna pause here because I see a few people have issues with the. If you are having problems, let me know in the chat or in the WhatsApp group. So I just want to get an idea of how many people can't hear the video who's playing now and can't see the video. All right. Okay, thank you, Bonita. I see you. I see you there. You can't see the video. Monique, thank you for that. You're saying it's lagging on your side. Peter, I've just sent a new link. If you can't, do me a favor, log out of your YouTube quickly and just use that link again and refresh. Click on this link now and let me know if you can now see me and see the screen that I'm currently sharing is I'm sending it in the group as well. Okay, I'm giving you a moment. Freezing again.
Up, down. feels so
But can you
overwhelming.
hear me?
And the moment I asked that question honestly, this is when everything started to change. So I did something that hurt
My
my
sound or
ego
his
pretty
sound?
badly at the time. I reduced my
Okay.
position size to a
So
level
there
that
is
felt
a
almost
lagging.
meaningless. Wins didn't excite me, the losses didn't hurt.
Mm.
It felt pretty boring. It felt like I was underperforming. And then something incredible happened.
Mm.
For the first time, I could follow my rules without effort. I could
Okay.
let the trades play out. I could take losses without emotional damage, and I could think clearly from one trade to the next. Nothing about the market changed. I changed. And this is the paradox that most traders will never understand. Trading smaller actually grows accounts faster than trading big because small size allows consistency, and consistency
Mm.
is what compounds over time.
Oh, that is a good one. So, but he said now small size allows consistency. And consistency, listen to this. I have to repeat it.
Traders will never understand. Trading smaller actually grows accounts faster than trading big.
Whoa, whoa. He is saying trading smaller actually grows accounts faster. So, what he's basically saying, if you are focused on consistency, consistent growth in your account by using smaller risk, smaller lots, right? It takes away the pressure of your psychology by you now not when every in every single trade that you enter, you now not just focus on how much can I get out of this trade, but you follow your process. You enter at where you at your entry, you exit at your TP, and the next day you come back, and the next day you come back. You consistently compounding your account, so that compounding effect at the end of the day will cause the growth in your account. But as traders, most of the time we are so focused on the growth, and even in this past 2 weeks, I had to evaluate my risk management strategy because I had a profit goal in mind. And that is where I started to see that the loopholes in my psychology now when it comes to growing a trading account. I am now more focused on how much can I make in a day instead of using a smaller lot size, because remember, the moment we size up, the moment we're using higher lots on trades, taking extra risk on, we are basically exposing our accounts, our capital to that environment, because out of the need, if it's all about where it's coming from, like he's saying, out it's coming from a need to make money fast, and that you can't trade like that. You need to think of it in terms of compounding your account over a long period of time, months, years. You need to think of it by with the compounding effect. That's why he's saying here you can actually grow your account faster by using smaller risk if you focus on consistency versus using higher lots because you want to grow fast, and then you blow up fast. You blow your account, you blow your money, you win today, and then tomorrow you lose it on a bad rate. So let's hear what he's saying further. This is powerful.
Because small size allows consistency, and consistency is what compounds over time. You see, big size creates volatility in your equity curve, and volatility destroys the compounding. So you don't build long term trading income with just one heroic trade. You build it by surviving thousands of ordinary ones.
Mm.
When you're
By surviving. So, and that's the goal. We want to survive long enough, meaning capital preservation should be your focus. Capital preservation, protecting your capital. Every single trade you go in, your goal should be capital preservation. I'm protecting my capital. I'm not going to lose what I have. I'm not I'm not saying be fearful, but your focus should not be on how much money I'm going to make. Professional traders are focused on how can I protect my money? How can I protect my capital?
Risk is small enough that no single trade matters emotionally. This is where you gain freedom in your trading. You get freedom to execute, you get freedom to think in probabilities, and you get freedom to behave like a professional. You see, professional traders aren't fearless, they're just more structured. They don't try to control emotions after they appear, they control risk so the emotions don't interfere in the first place.
Sure, sure. I need to repeat that. That is too good. I need you to hear this.
Fearless, they're just more structured. They don't try to
Structure.
control emotions after they appear, they control risk so the emotions don't interfere in the first place.
Ooh, ooh. That's good. So you see how he is breaking it down, how your emotions is attached to your lot size, and how your emotions is attached to the risk you're taking on. Because remember, by us opening a trade already, we're taking a risk because we're not certain. We don't have certainty. The environment of trading is an uncertainty environment. So you can't use the same brain that you are using in your daily life, in your daily job, or in your daily life to trade. When it comes to the trading environment, you have to think like a trader. So we're risking capital to make gains, right? Now, what he's saying here, you should basically detach from the outcome. You should not be so involved emotionally in the outcome of every single trade, because if your risk is what he's saying, if your size is high, you automatically fall into that trap where you are emotionally attached, because now your risk is high and you are basically not comfortable with the risk. You are not accepting fully that you have risked now this amount of money on this trade. You're not accepting the risk, so you're not going to allow the trades to play out. You're not going to hold to TP2 or TP1. You are not going to trust the analysis. You're not going to trust that the market is going. You can clearly see it's going in that direction, but because of the size of your risk, you went in too big, or not just too big, you went in at a size that is you that which you are not comfortable with. You only know what you are comfortable with as a trader. That's why you can't compare yourself with me, you can't compare yourself with other traders. You need to figure out what am I okay with, and then not over risk. Don't have too much, put on too much size on a trade, one trade that could take you definitely completely out of the game. Because remember, the focus is surviving. We want surviving the account, keep the account for as long as possible so that you can take another opportunity. Because the market's going to present opportunities again and again, tomorrow, the day after, next month. But you need to have capital to partake in the market. Let's
So,
listen
trading
to him.
small isn't a weakness, it's
Come
a
on.
psychological intelligence. Most
Hmm.
traders don't blow up because their strategy or their system failed. They generally blow up because their position size was too large for their psychology. The market didn't break them, their risk management did. And once I accepted that, my entire relationship with trading changed. I stopped trying to feel so powerful. I stopped trying to prove something to myself and to others. I started trying to feel neutral. And neutrality is where the consistency lives. And this is another key idea first and profit second. Many amateurs ask,
I saw
how
that.
much can I
I
make
also
today?
heard the sound.
Professionals ask, how do I ensure I'm still
Okay,
trading
I
next year?
need to go back because
And that shift in thinking,
there was a part that you must now.
when you trade small enough, trades become just trades. Wins are information. The losses also information, nothing more. And this is why professional traders focus on survival first and profit second. Many amateurs ask, how much can I make today? Professionals ask, how do I ensure I'm still trading next year? And that shift in thinking, I'm telling you right now, this will change everything. When survival is your priority, the desperation, it kind of disappears. And your desperation is the root of most trading mistakes. Trying to make money faster usually makes you lose it faster. Trying to trade allows money to come more naturally. The market does not usually makes you lose it faster. Trying to protect your ability, ensure I'm still trading next
because
year.
I want you to hear that.
And that shift in thinking, I'm telling you right now, this will change everything. When survival is your priority, the desperation, it kind of disappears. And your desperation is the root of most trading mistakes. Trying to make money faster usually makes you lose it faster. Trying
Ooh, we have to talk about that, guys. Because I don't know if any of you are really getting a mindset change. Because this when I listen to that, I realize that wanting it fast is the enemy because you lose sight of the process. What got me from 10K to 30K was process. Now that I want to take 30K to 100K, suddenly I'm starting to make horrible risk management mistakes because now my mindset, something in my psychology changed. I'm shifting from a process perspective, focusing on the process, growing the account steadily over a period of time, compounding, compounding, compounding. And now we are focused on a goal and we want to get to that goal fast. So we're now not taking quality trades or we're not managing our risk by on some trades our lot sizes is higher or we're going in with more than what we're supposed to, risking too high, and that in itself is bringing your confidence down, is bringing your account down, and in that your mental capital as well, because your mental capital is very important, and that is what he's touching.
to protect your ability to trade allows money to come more naturally. The market,
because remember, we're using our brains. It's a mental capital. You have money in your account. It's not just that. You also have your mental capital that you need to protect, which is your ability to trade, your ability to execute, your ability to allow a trade to play out, your patience, your discipline. When you come to the market at the same time, you don't take trades out of your session. If your trading plan say you must only trade in London and in New York. You must only take one trade a day. You must, those the rules. If you're not respecting your rules, then basically you're draining your mental capital.
it does not reward the intensity. It rewards endurance. And endurance requires appropriate risk. Once you structure your size so that losses are tolerable and wins don't intoxicate you with euphoria, consistency becomes possible. And once consistency appears, compounding quietly starts working in the background. And that's how real trading careers are built. I had to unlearn the fantasy that success in trading comes from boldness. I had to detach from the ridiculousness I was consuming on social media. These massive home run trades and P&Ls that made me feel like that's what I was supposed to be doing. And it's almost a crime because success in trading does not come from that boldness. It comes from patience, repetition, and protecting your mental capital just as carefully as your financial capital. The unfortunate
Oh, can someone put in the comments patience, patience, and patience again? It's not just patience with your growing your trading account, but patience in the markets, patience with your process as well. And it's wow, this is so good. Let's listen to it again.
it's almost a crime because success in trading does not come from that boldness. It comes from patience, repetition, and protecting your mental capital just as carefully as your financial capital. The unfortunate truth is that patience and repetition doesn't make clickable and exciting social media posts. Those
Very important. That's why I'm not all about the hype because the process is not sexy. The process to become a profitable trader is not a sexy process. It takes patience, it takes perseverance because you need to protect your mental capital. For instance, I'm just going to be like from my personal perspective. I believe I'm a spiritual person. So I believe that you need to protect yourself as well. Like I don't surround myself with toxic people or I don't surround myself with negativity. You won't see me walking around and going to parties, and I don't say that is bad or whatever, but I don't consume alcohol. I don't put things also in my body that will make me like mentally in a state where I'm not positive, where I'm not alert, where I'm not awake. So that is what he's talking about when it comes to your mental capital. As a trader, you have mental capital that you need to protect. I in my experience, when you come to the market and your mood is down, for I had that so many times. When my mood is down, I perform poorly. When I've had a fight with someone at work or someone or a friend or what, and I don't protect and I come to the market with that emotion, I normally perform bad. If you are going through things maybe in your personal life, it will affect you. How you come to the market, your emotional, even out as ladies, we women going through the most those things you need to be aware of as a trader coming to the market. You need to be in the right frame of mind as well, because sometimes you do need mental capital also to perform good in the market.
big trades do.
Let's listen to
And
them.
once your mind is damaged in this way, it starts thinking this way, no strategy or system is going to help you. Trading smaller isn't about making less money. It's about staying in the game long enough for your edge to work, letting it pan out over time. This is why the trader who survives always outperforms the trader who swings for glory. And the
Oh, that's good. That's what I'm saying. If you want to compare me with other mentors, right? Show me a mentor that is consistently sending the trades out, consistently coming to the market, looking for opportunities, trading the market, wins and losses, not just wins, losses as well. And after this, now we're going to go through my actual all the trades we took, and we're gonna see the performance when it comes to the trades that we took, the losses, the break-even days, the stop loss hits, the wins. So the consistency is what is key, because some people can do it for a week and then they give up. Some people can only do it for a month and then they give up. But this is not this is for to build yourself up as a professional trader. You need this type of mindset. That is what I want to bring out here tonight. This is the mind frame that you need to be in to maintain that. Because we want to make 100K in a month. We want to make 10K in a day. And we want to consistently stay on that. That is the goal. We want to make 5K, 10K. But you don't want to just make it and then lose it the next day or next week, and then make it again and then lose it, and then at the end of the 3 months or the quarter or the year, then you are at a break even. You want to be able to make life-changing money, but you need the right mindset, and this is the things and the steps that you need to pay attention to.
The moment I truly accepted that, everything changed. Not my system or my strategy, not the market, my relationship with risk. And that's when I stopped gambling and started trading like a professional trader. I really wish someone had told me this earlier
It's not
because
charging.
it would have saved me years of unnecessary stress. The market is not a test of courage. It is not a place where boldness is rewarded. It is a place where patience, restraint, and emotional stability are rewarded over time. Position size is the lever that controls all of that. And if your size is small enough, the losses become manageable, the wins become routine, and execution becomes repeatable. If your size is too big, nothing else matters, not your strategy, not your experience, not your intelligence. It's almost a certainty that everything collapses underneath that emotional pressure. And once I truly understood that, and not just on an academic level, but I conceded to my innermost self, trading stopped feeling like a battle. It stopped feeling like something I had to win. It became a process I could execute calmly over and over again without needing the market to validate me. And that's when consistency finally appeared. And consistency is what creates real progress in this business. Not excitement, not intensity, not the big hero trades, just the ability to show up tomorrow with the same mindset you had the day before. Trading smaller didn't make me feel impressive. It made me feel effective.
Again, there is talking about the process. You're saying that consistency is slow. The process can be slow, but you'll see if you long enough practice this and you are focused on consistency by building and growing, give yourself 2 or 3 months. Like, don't even give a timeline. But what he's saying is basically if you focus on consistency and your small is at a good, don't your size is small, then you will not be so in your feelings, in your emotions. You not even focus on the P&L. You will not focus on the profit and loss statement. You will, at the end of the day, when you get to see the growth in your account, you will be so shocked because you have focused on your process. You've taken trades consistently over a period of time. 20, 40, 50 trades you have taken. And also, another point that he's making is when you keep the size small, your losses are not damaging your account that much. If it blows your account or it drains your accounts too much because you're keeping the size small. Because we know the market is not the same every single day. We can't expect to win every day. Every day when we come to the markets, we trade what we see and we don't trade what we hope that the market's going to give us. Yes, that is just part of the journey. Losses is part of the journey, but we're going to look at the trades now and then you'll see how you can capitalize on the winning days by, even with the small size, how you can still make sure that you grow and compound your account by what including taking losses as well. So I think there's only one of 3 seconds.
And effectiveness over time is what separates traders who survive versus the traders who ultimately disappear. So if there's one thing I hope you take away from this video, it's this. The market will always be uncertain, but your relationship with risk doesn't have to be. And when you get that right, everything else in your trading will have a chance to work.
All right. Thank you. I hope that really helps someone also tonight. In the way it helped me to see my trading in a different light, that it is not just about trading and taking trades, but risk management and proper risk management is crucial for your success in trading. As he mentioned over and over again, that when you are risking too much, you are most likely going and wanting fast profits. You're wanting fast gains. And in you wanting the fast gains, the get rich fast method, you are basically not focused on the process. You are forgetting that this is a probability game, meaning not every trade can be a win. There must be losses. There must be losses, and but you can't control the fact that there's going to be losses. It is a probability. Sometimes there's one wins and then sometimes there's losses. But how you manage your risk is what you have control over 100%. How much you are losing is it's on you, it's not on the market. Because how many times do we know we re-enter when we know we should not have re-entered, and then we lose more? Or we held on to a trade too long and we should not have held on to that trade, and then we lose more. Or we already make profit for the day and then we decide we're going to look for another opportunity, and then it goes south and you give back all that profit. Who is to blame for that? You, because you wanted your growth fast. You want, where does that come from? And then that's what he was saying also now. Like, it's not that you have a discipline problem. It's that you're sizing too big. You wanting, you can take a mediocre trade, but if it's with a small size, it's not gonna damage your account that much. But now you're taking a mediocre trade or a weak trade, and then it's blowing so much, it's draining your account so much, it was not even worth it. So this, your size matters. Above it all, your size matters. All right, so let's go back to these 2 weeks. I would say these 2 weeks, in my opinion, um, sorry, these past 2 weeks, it was not good. It was, it can be better. We got some great trades in between. You will see now if I go back. So I'm gonna start by the previous week, um, which is on the 11th of May, the Monday. All right. I have to delete this. All right. So we can see gold is currently, or gold was on the 11th, that is a week ago, on the 11th of May, a Monday. We saw that gold was sitting at this support area, right at 467, or let's say 4680. On 4680, right there, gold was sitting at this very area, and as you can see, it was a previous tested area, a strong support, because price did not break through that area as yet. And when we came to the market, it was very early. I remember it was 11th. I anticipated that we need to get in at 4671, 4658 was our TP. So at the time when we came to the market, remember, I don't know if you guys can remember what happened. So when we came to the market at 7, this already happened. This is that day when the market basically left without us. Now the strategy is very clear, right? After it breaks out of a support area like that, I bring the support till here, then you can see clearly it's breaking out. This is where it's breaking out. This red candle right here, this one, on the 1 hour, right? This is where it broke out. But when this was at 6, 7 is when we came to the market. So when we came to the market, this already happened. So this week, remember, I sent you. I still sent with my zone right here where it broke out, and I sent 4671 was where we're going to enter. 4671, which is right there. My stop loss, according to what I sent, was 4676, 4676, and the TP1 58 and 50. So 58 is here, as 1 is to 2 rusty reward, and 50 is a 1 is to 3 rusty reward, right? So price, remember, we missed it. It came back again, but we missed this entry. So as you can see in the zone here, there was multiple, there was two pullbacks. So this first was the first breakout, right? This week was the first rejection week, right? And then price pulled back into it. So this would have been actually a better entry would have been up here. But remember, we missed out. So we entered for 4671, missed it again, dropped, and then it stopped us out, right? When you on this candle here, I think stopped out, and then what happened? It dropped. Stop loss was here. If your stop loss was above this, should have actually been above this high. But I remember this day we didn't actually enter because I didn't even get a chance to tell you to enter because of the drop happened so quick. But that would have been a good entry. Even on this rejection candle, the second one, the right here, when that candle, because remember our based on our entry strategy is as soon as the breakout happened and the pullback, we wait for a rejection candle at the zone. So that was an indication to get in again. But as you can see also, it was around 10 a.m. when this trade actually played out. It actually played out, I think, to okay, played out to 4650 right at our TP2 area, and then it moved all the way up. So managing the trade, I can't talk about that here because we didn't actually take that trade. It was the idea, but I remember that day we missed it on that Monday. Let me know if you guys have any questions, right? Because why did this thing now disappear? Okay, here it is. I was looking for this. Here it is. Thank you, God. So the 12th, on the 12th, that was the Tuesday, we came to the market and we also took a sell at 4718, 4704. So that was the idea. And then 4718, this block here, 4718 is all the way up. Oh yeah, it was this trade. Remember this trade? This trade that I sent. So there's the breakout candle. And then we waited for that pullback, but we entered by 4716. Remember, because it was pulling back these two, and then it eventually reached 4718, and then our TP1 was at 4704. 704 was here, around here. And then 4700, right? Yep. 4700 actually dropped further down. So what does the trade that we took, the stop loss was 47223. 23. I just want to show you something. So yeah, Same strategy. We wait for the breakout, we wait for the pullback. There's a rejection candles in the zone right there. And then when we check at the 1 hour, we see the strong 1 hour candle close. Now, if you took all your profits there, it's fine. But we can also see this market dropped to 4688 that day. It dropped to 4688 and then it pulled back to 4708. So that was clearly at 4708 because look at all of this, all right? Look at all of this. One, two, all these weeks here testing, pulling back. So this must be some area. If you go to the left, you'll see right here, price, the market was basically retesting, broke out, retesting multiple times before it dropped way down. Now, I only saw this afterwards, and obviously, don't have a swing approach. But I want to speak about days like this. On days like this is now days where you can leave runners, where you can make up for the day, for the previous day where you missed out the trade. That's why I'm saying the opportunities will always be there. The market will one day you might have lost on that previous day. Now you missed out the trade. But now what you going doing, you go and chase. You chase the market. It's already far away from where you should have entered. Now you're planning to enter, and then the market, just when you enter, it pulls back to where it broke out, and then now you are in a big loss. Whereas you could have waited for a day like this. Where now, if you had the patience, and if you, for those who did the course, and you understand the liquidity that is sitting here must be filled, meaning price has to come to from here, it has to drop, it has to go there. So in order for you to make sure you don't lose money, you put first thing your stop loss. If your entry was up here, even you bring your stop loss down into profit. It doesn't have to be here. You can put it just below where you entered. And then obviously here you can see this pullback is coming. Now you are watching this on the 15-minute. We see all these 15-minute candles just bouncing against another resistance, you can say. And this resistance is in line with it. So you're watching this the whole time. You're watching to see whether this market or the candles will go above this area. Only then that downwards momentum is finished, if it breaks above that high. So now you need to think and then make a decision based on that. So holding this trade open is going to cost you patience. It's only going to cost you patience. So all these 15-minute candles from 9 o'clock the morning to 4:30, 4:30 in the afternoon, you could have been up 440 pips on gold. 440 pips on gold. You don't even have to hold the trade open overnight. Now, you're not just making your daily target, you're making 2 days worth of profits for the day that you even missed out yesterday. So I just want to show you that opportunities is always there in the market to make your money. If you have, even if you use smaller risk, if you use, say the previous day, you okay, we didn't take the trade, we didn't make money. Now this is now Tuesday. Now you use your 0.02 four lots, sorry, 4 positions. Now with that, you made your 2,000, just an example. So you already up 2,000 for on that trade, 2,000 growth on your account. You now have, your target was 1,000, but because you held the trade open for longer, you've reached even more. So this is now the day where you capitalize on the market. Okay, let's go to the 13th. That was on the a Wednesday. So we came back the next day, and let's see. All right. So the 13th was right here. I'll just delete these other markings that I just did now. This was the 13th. Coming to the market again, you can see I was just selling that whole week. The 13th, we actually, that was the Wednesday. Um, for 700, for 688. The 13, yeah. So as you can see, coming from a strong bearish momentum, 7 a.m. is here. It's around there. Okay, so we were looking to sell again. So here we are now again. I remember I just drawn out, and I was waiting for price to give us a break here because we wanted to actually enter at 47. No, entry was for 700, for 688. Yeah, for 700 around here somewhere. Let's see, the 7 a.m. Yeah. So after this red candle here, but remember we were then stopped out because then price came into the zone and then it started to break. If I just delete this, this is the day when our stop loss got hit. Okay, so now you have a loss. This is a losing trade that has hit your stop loss, right? So you now are basically, if you made a previous day twice as what you normally risk, you are now basically in break even because you made twice. Now you're losing one. Now you have one left, basically one. You're up one. Now, yeah, what happened on this day is the time when we came to the market did not play out to our TP, right? You can see what happened here. So we got stopped out this on the 15 minute. But let's look at the market in on a higher time frame on the 1 hour. Sorry. Can you check the week? So what happened there? We were just caught. The reason why we got stopped out, we entered on a 15 minute candle. And that zone is still valid. Now you would ask me, but what? Isn't the entry wrong? The zone was based on a 15-minute rejection off. It's rejecting off. Yeah, on a 15-minute. But this pullback stopped us out. These two candles on the 15-minute stopped us out. And then what happened? It went all the way up to 4715 and then dropped just to this hourly candle. So within that hour, the market stopped us out, right? Now, on days like this is where I would re-enter. So that's where your risk management comes in. Now, it's important that you don't size too high because of a scenario like this. If you get stopped out, now you can re-enter with the same like, I mean, small risk. And if you, for instance, you wait for that pullback, okay, now you see it's coming back to the entry where we were supposed to enter, right? So on the 15 minute, this candle then come down, and now you entered a little bit later, 9 o'clock, between 9 and 10. But leave it, have your stop loss. So put your stop loss at the same place. And your first TP is like 1, here you up again. 1 is to 2.7, risk to reward, 150 pips just from here before it pulled back, sorry, and then it stopped you out. Maybe you had a runner in. So there again, 150 pips. You could capitalize on that with your lot size, your normal lot size. Now, here is where the other part came in. So on that same day, I think it was the 13th, right? No, so this trade actually, of course, my TP2 that I sent out was to on 4700, but this trade actually dropped all the way down to 476. So even if you held it a bit longer, if you check on the 1 hour, this candle, when it rejects off like this, it's indication that price wants to drop. And then this candle, after this red candle, it dropped even lower to there before it actually moved up again. So that was on the 13th of May last week. So now we're gonna look at, all right, we're going to look at the 14th. So the 14th was around here. But what I want to bring your attention to, the 14th was last week and Thursday. That was a sell also for 700, for 680. Wait, no, and why do I have the same thing there? So, boom, 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 boom. The 14th, don't know what happened there. But okay, we also sold from 7 a.m. around there. It was here. Yeah. But we could clearly see here, this was also a losing trade. Remember, we were stopped out again on this setup because my stop loss, I think, let me just see, I'm not sure. Yeah, we were stopped out. So we entered around here, and when we got stopped out again, but this is a good example now. Look at how, look at this. Went all the way up there again on the 14th, and then a drop. But I want to go to the 1 hour and let you see what was happening here. Perspective on the market is very important. So you might think, why am I sending losing trades out? You remember what? Now that I look at it in inside, no? Is the market was in a consolidation. We were trading with and those spikes with the wicks you're seeing with when it does that on a 1 hour time frame, it's you most likely going to be faked out on a 15 minute. The market was not trending, and that's why it came to hit our stop loss. So it required us to be patient a bit, to wait for it to play out later in the day. So, and that you can see happened afterwards when it did all of that nonsense there on the 14th. Then it was playing around here, consolidating, and then you eventually see it drops all the way up. So I want to go to the 4 hour here and just show you, looking at it from a 1 hour perspective. You are thinking, but okay, why is the market moving in our direction? Then it go and hit our stop loss. Check all these small candles on the 1 hour. And if I zoom it in like that, the only time when this actually played, when it broke out of structure, is on this day. So you know, remember when did it break out of this consolidation? Because all of this is a consolidation box, right? So we were trading inside that box. I still send this in the group, I think. So on the 14, which we will discuss now, what we were busy discussing now, afternoon, this is the 14, 3 o'clock, this is a 4 hour candle. So it started at 7, the evening then. So the 14, the Thursday, after we traded the morning, price actually broke out of this consolidation, and then it gave a retest. If you have this here, you'll see this last big low here retested at that low, and then it started dropping. Friday also, it dropped all the way. So Thursday and that Friday, unfortunately, we didn't trade the Friday, but also all of that price action in that week. That's why I am not getting worried if my trades are getting hit stop loss, it is not an indication that our strategy is not working. It's also the market was in a it's what's moving sideways the whole time. We were waiting for that breakout. So now we're going back. That was on the 14th. So now we're coming to this week, Monday. So this week, Monday, remember the 18, the 18 was right here, and we took a sell 4532. Yeah. Sorry. So I could still see after that break. So remember the breakout happened on Thursday last week, right? And Friday, it moved from here to all the way down here. So when we came to the market on Monday, you can see all of this here, right? So this is where the market was. Now, if you check on the 1 hour, check here. Again, consolidating. But here we get this break. It's not really breaking that candle. Weak, as you can see, the body is, but not really, the market is not clear yet on structure, but we are on the 15-minute waiting for it to give us a break in structure. I still said, yeah, this is where we came to the market, right in this block that I marked off there for you, the blue block. So check what the market did. This day we also got stopped out. I think we entered on this candle here. For 532 was the entry. Somewhere on this candle. Because should have been at 4532. Okay, so stopped out again, but it did not go anywhere though. When it stopped us out, check here. For a long time, it just went up here and then it played around until 1 p.m. when it actually broke out of structure and it broke this high, which also didn't make sense to me because if you check on the 1 hour, this is where what it did. So before these two rejections, rejecting off, you thinking I thought it will continue going down. It then broke out, and then now you're thinking maybe because it broke out here, it's gonna go up. It came back down here, as you see, went back up again, retest there, and then it dropped. So again, we on Monday, messy price action. If you check on it on a 4 hour, messy price action. We didn't get a breakout strategy. We didn't get a breakout entry. So that was for this week, that was a loss. Then on Tuesday, the 19th, again, I was still selling. I'm only really most of the trades I'm sending is sells berries because we, for obvious reasons, we are in a bearish momentum. We are in a downtrend, going in a downtrend. So on the 19th, which was here, let's go to the 1 hour time frame. Just check here. So the 19 was here, but remember Tuesday I was writing exam, so I didn't watch it in the morning. So I sent out a trade for the Tuesday for 2 p.m. So this time around here. Now, as you can see, we are still now here in this type of consolidation. If I have this box, and remember the trade that I sent out on Tuesday, 2 p.m. So now that trade played around with us, first hit the stop loss. Remember, it first hit the stop loss. But if you re-entered with us, you could see that that trade dropped from entry, right? Dropped all the way down to this low here. This is the one that Karen was holding. I got out around 4.5, I think. Karen was holding here, I think, for the 4.70 something. And you could have made up 480 pips again. on Tuesday for the previous day loss. I'm just showing you how you can grow your account even if you take losses. So the market will present the opportunity, users have to execute properly. So this was the Tuesday, a very beautiful um, trade setup there. Let's go to then Wednesday, which was on the 20th. Um, all right, Wednesday. I sent out the morning. Okay, yeah, this was a weird trade. First I wanted to trade the morning. Yeah. Remember, this was the entry here. I wanted to take a sell. I sent it out. 4465. 4465 was down, way down here. Very, very, also, as you can see, it was these. It was this. All of this weeks here, playing with us the whole time, looking like it wants to drop. Even on this, the second time came down, and I still said it looked, now it's the time that it wants to drop, and then it hit our stop loss. Very annoying. This was an annoying trade because the as you can see, the structure here was still fairly bearish. As you can see, we were still going in a downtrend. And there you can see on the 1 hour, price was first rejecting off here, but then at 10 a.m. it broke out, and then that it actually did the breakout, retest, and then it continued going up, pulling back all the way. I thought it's gonna go to 4570. It did actually 4570 all the way up there. That was now, and remember, I wanted in the afternoon. I said I actually sent out this one here. No, that was the next day. That was not the next day. It was the next day. Okay, so that was now on the 21st, the 20th, sorry, and then yesterday's trade. So that was also a lost trade. So we had 2 wins, 2 lost, 1 win, 2 losses so far. And then yesterday was the trade when what I saw this trade, the sell again. I saw it so early because it was when I came to the market, I saw this happening here. And I said, we need to take it. We need to get in as soon as the market break. We're gonna take it. It was at 4535 was the entry. 4535, right? Stop loss I think was above here. It was 4541.5, and 4524 was the TP1, right? 1:2, right? And then 45 and four, 5, 14, 15, 14 or 15. That is what I asked, and then I said I think it's going to for 500. Remember I said that, and then this trade pulled back. First DP was hit, and then okay, here's the one I wanted to speak about. Okay, so yesterday's trade, guys. There's another opportunity. It was another opportunity. There was another re-entry. I don't know how many of you did take it. But once you start seeing rejection candles like this again, if it pulls back to our entry, because gold likes to pull back to our entry, yes, Karen. It likes to come back sometimes to the entry, but the confirmation that we will look for is whether we can see there's a rejection candles with the wicks at our entry, and that is giving you the confirmation to re-enter. Because you can see that head and shoulder pattern, for those who are busy with the training, look here, head and shoulder pattern rejection candles, or that we talk always talk about the wicks with the candles rejecting right at the zone, indicating that price is still going to drop. And you could have entered again here, because on the first year we hit out TP1, TP2 eventually got hit as well. TP2 was around 4514. Okay, that was TP2, sorry. It even went lower than our TP2. It went to 4500, and I could see it's going there because obviously that's another key level, but also confirmation is these all of this liquidity to the left. Can you see how the market is keep on doing the same thing? It's repeating. When you look at to the left, you can actually start reading it for yourself. You don't need me. You can see this is what the market is showing you. I have nothing against if you take your own trades, because if you know where to enter and you know where to exit, you know how to manage your risk properly, then by all means go for it. My job here tonight is just to give you guidance on having the right mindset when it comes to trading and protecting your capital and making sure that you are in the game and making money, consistent money over a long period of time. Staying consistent. All right, so that is it for tonight, ladies and gentlemen. I hope you have learned some things here tonight. I hope there was things that you could take away that you can apply next week in your trading, in your journey. And yeah, let's continue to grow together, develop ourselves as traders. I'm not just focused on charts. I'm big on wanting to, we must work on the minds as well. We must work on the psychology as well. The I didn't even talk about fear, the fear that having high lot sizes can bring also. So have an awesome evening, weekend. I will be back on Monday, Tuesday, Wednesday by God's grace. And yeah, then we will take it further next week. Have a blessed evening. Thank you, everyone. For, for those who stayed until the end, thank you and have a good evening further. If there's no questions, or you if you want, if you have questions, you can always ask me on in the group. Mm-hmm.